Good afternoon. This is the Eye of the Storm podcast with the Elliott Wave weekly update for the S&P 500, being recorded on Friday, October the 10th at 2:20 p.m. Pacific Daylight Time. A lot took place today, and it didn't start off that way. And it kind of came in, I'm going to say, just about 11 o'clock Eastern today. And prior to that, the market was kind of moving along, getting through the beginning stages of today's expiration. Had a lot of play up and down, no problem. Things were going okay. Then suddenly, the president made an announcement on Truth Social about China, and basically saying that China has done some sinister things, and I'm quoting, and when respect to the rare earth minerals that the United States very much needs for production of many things. And so that avenue seems to be going to get shut down because the president's response later this afternoon after the market closed was that he intends to put 100% tariffs on top of already the existing tariffs. So we're back to that April of 2025. We've reverted and gone back to that to, okay, what do we deal with? So we got a tremendous, tremendous spike down. And that just continued throughout the balance of today's session. We had some decent bounces, but nothing compared to what the selling was. Then at the end of the day, when he made that announcement, I just want to review in case you haven't looked yet. But let's just start at some important things. Bitcoin closed down $7,100. And S&P, the futures market, closed down $227. The NASDAQ future closed down $1,101. Gold, if it had actually stayed open after, finished up $62.90. Silver back up 47.50. The Dow future closed down 1,118 points. Apple was down 877, went down another three, and thank God, they basically stopped. It took another $3 came off the price of that stock. AMAT, another $3. AMD, another $7 came off the price of the stock. Closed down 17.99. It's now 207.65 bid at 69. Closed at 2014.90. Amazon down 4 from where it closed. Broadcom down 5 from where it closed. Google, I'm just telling you, down 2 from where it closed, et cetera, et cetera. NVIDIA touched 195 this morning, folks. It's now 180 bid at 180.10. $180.10. $180 5-cent bid, $180 10-cent offer. Closed at 183.16. Tesla was trading much higher than where it is right now during the day. Closed at 413.50. I was down 22. 404 bid at 404.45. Now, so here we go again. And pretty much can guarantee you that all of this risk on trading that we've seen this week has just gotten absolutely annihilated. Annihilated. The call heavy expiration, the timing of everything that's happened upended today's expiration in a massively big way. So the other thing, before I even start on what's going on in the market, so you're just all sitting looking at this 500 S&P 500 cash index and my largest count. I will get to that in just a second. What I now want to bring in, I discussed this morning. In fact, I'm going to go directly down to that, and we'll come back to this. I'm going to go over to the ES, and I'm going to go down to that 15-minute chart, and I'm going to, come on, let's pay attention. There you go. Going down to the 15-minute chart. And this is where we were when we came in this morning. There is the opening, 6806. It popped up to a slight new high over what we had done the day before. Not over this, but over that just a little bit. Now, then we started to go down. Here we are, 7:45, we got our first stronger leg down. That was the announcement from China. Then it got worse, then it got worse, then it got worse. And this is the after hour. Boom. When we're going to stack 100% tariff on them. I mean, it gets to the point where it's like, really? That's real smart. You know, it's like kids playing in a sandbox. Anyway, here we are. Let's talk about our gamma levels. Now, I know I've been trying to work a lot of how gamma really does affect how our indexes are going to trade, how the ETFs are going to trade. And the levels that get put in place by the large traders, by the positions that they're putting on and parking in different areas of the market, develop what I refer to as like call walls, large gamma 1, 2, 3, and 4. We have combos, we have the volatility trigger, we have put walls, etc. Now, going down what I went over this morning, and I talked about the danger, particularly I was actually looking at that time. We'll do it started here. I was looking at the spiders first because in the spiders and the Qs, things were compacted to a small range, to like a $2, $3, $4 range. And if we started to go down and went through them quickly, that the markets were doomed. That's pretty much what I said this morning. And then we got it. Also, how I left it this morning, I left open the possibility that we were still going to go up. And we were going to go up again and possibly even break above what I was labeling as minute wave 3, that completion point, which is now firmly in place, obviously. And we had a 1, 2. And I said, it as a 1, 2, in fact, we didn't have all of that, but as a 1, 2, what would come next is a third wave down. I said, so what's going to be our ticket? What's going to tell us that that's what's happening? Is that it starts to decline, it picks up speed, and it doesn't look back because it's not going to rally. It just continues to hit bids. Third waves, characteristically, personality-wise, are the longest and the strongest out of an Elliott impulse 1, 3, and 5 wave. So, and that's exactly what we got. So it was put in place for us today. I've also been talking that it's not going to take too long. The market is going to let us know what's up and what direction we're going to be heading. And having to leave open that the fact that they might just continue to go up was pretty wild because let me just say, if this had to be marked as minuet wave 1 of a continuing minute fifth wave up, that's the alternate, then this could have been ABC. And if it was an ABC, then we should be going up. And so it was the same ticket, just in reverse. That if it's a ABC and we're going to put a wave 2 down here, then we're starting a third wave, and it needs to go up in the same fashion that it went down, where it starts to go and it doesn't stop and it doesn't look back to see, gee, what's coming. Doesn't, just keeps going. So the downside won, but what's important that I'm trying to make clear here is the characteristic of that wave. And when you see it in action, let it imprint something into your memory. Because moving forward, when we're discussing a third wave and how when it really kicks in, this is what you're going to see. That it should help that it's like, well, I'm going to sell it. Or I'm going to, you decide how you're going to trade. And if you've got long positions, you're going to decide that maybe you need to do something. Now, in the SPX and the ES and in that whole complex, today I discussed that the market may start by going up and giving a visit to 67.97, which was large gamma 4. Do you see the high today? 68.06. So to start, they opened above large gamma 4. And within pretty quick, we came down, and when it was clear that we were going to start to slide, that got annihilated. So here's what we went through in a very quick manner. We went through large gamma 4, which was at 67.97. This is all going to be ES, 67.97. Then we dropped further, 67.72. We talked about it. It was the volatility trigger, and I gave pretty clear picture on if it broke, and the fact that it was high, that it's going to aggravate the selling. It's going to produce more intense selling. Hit, we went down. And we didn't just go down, we went down through it. In fact, we went down far enough that we rammed into the next one, 67.47, large gamma 1. We broke that and we kept going. Now, what was last up to hold the market or devastate the market? And that was 66.97. That was the put wall. 66.97. Right here. We started to go up, save it. We got up, we got above it, and then boom, sorry, not going to work. And then thought, okay, we're not going to go through it. And then boom, 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 boom. We did. So truly, we were down to the bottom of the levels for today. It's expiration. There's stuff that's going to be coming off. There's stuff that's going to expire. If they thought that they got to a certain level and monetized something, God bless them, because if they were monetizing the call, getting out of them, great, good for them. If it was having to sell somebody who would have been long and they didn't get out, oh, what a miracle, right? So much going on. But yet, when you're just watching it, it just was slice, 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 and dice, and dice, and dice. And then the final blow came after the market closed, after the secondary hour that they allowed to trade closed. And that was, we're going to smack them with 100% tariff. That'll teach them. And it was bam. The market dropped from, let me just go to see what that high was. 24,000. This is, no, I got to go to the S&P. Excuse me. I was talking in the NASDAQ. 65.99. We'll even give it a little bit, like 65.96, up in that area. And it slid, and it slid in a quick hot minute down to 65.40. 65.40. And then managed to run real quick back up to 65.52. And I imagine whoever did that's like, oh, sorry, I can I give this back? I can't speak directly but how things are going to open. I can only guesstimate right now, like the rest of us, that come Sunday for Globex, the market's going to gap, because I think this is just going to brew for 2 days. So we're just seeing them now. The stocks are still trading, folks. That's what you're seeing flash here on my screen. And you got a couple of buyers. So this is going to show up. It will get the buyers in there, but that's because they've already settled out something. They've either sold the stock or they now need to buy the stock, or just, whatever. They just want to get delta neutral. And I think there's going to be more sellers, because let's remember, call heavy. Call heavy. And you just have to take, if you're interested and you go look and you go, I want to see if it should still be there. We're going to just take a look at Apple and look at today. Now, stock closed at 245. So what did we come down through? Here, you can see everything. What was the high? 256. So we had in play the 257 and a halves, the 255s, 252.50, the 250s, the 247.50, and actually the 245, right? Stocks trading 242. So you got the 242 and a halves that somebody's going to have come through expiration. and they probably won't be able to sell it, etc. So, and some decent volumes. And then here, the puts explode in your face. If they were short the put, my God, you got killed. Quickly, you got killed. Volatility perked up. Instead of going down, volatility perked up because of suddenly we're selling. So this all put together is truly what a third wave is all about. All kinds of things come to fruition. All kinds of things begin to happen. Now, that was the backdrop for coming in on what I want to talk about today in our market. Now, let's go take a look at the Elliott picture. Before I begin, I'm going to start as I always do, just to give a very quick recap or just a recap of my largest picture. If you're new to Elliott Wave, the degrees, these are from R.N. Elliott. This is what he wrote. This is in his original works. The highest degree that he counted was the grand supercycle. Now that, to me, the grand supercycle, folks, is centuries. It takes centuries to go a 5 wave on a grand supercycle level. Why? Well, I think we're still in grand supercycle wave 3 to the upside. So we have finished, and this is how Elliott started it, that grand supercycle wave 1 finished in 1929. Grand supercycle wave 2 finished in 1932. So we've been in grand supercycle wave 3 since 1932. And we're just finishing maybe the cycle level, the cycle 3. So we got a lot more. But as I've said many times, yes, cycle 3, we're going to have a cycle 4. This is the other point that I'm going to have to make today. I know what I'm looking for accordingly to the count that I'm going to show and talk about. But I'm going to have to take a serious look at an alternate, which the alternate is like, okay, this is now expanded far enough. We may not be getting to 7,000, but we're dang close. And now we have a problem. And now we have news. And now we might have a spike. And so, yes, there's a lot more in this 4th wave. And yes, within the month of October, as I described on last week's podcast in the S&P and in the NASDAQ about what we have coming up and how we look at left tails, right tails. Right tails are going to present a bullish occurrence. So something in the market turns bullish or presents a bullish picture, and you have these large moves. And so the left tail is where it's a bearish picture. So something bearish happens to the market, and we get these moves. And I've updated that number. And so we're going to go over the left tail again as well. Now, I will also, I haven't done it yet, because let me just tell you, the algorithms are very, very busy. But I will, and I'll likely include it on Monday's update, or I'll make a separate update because I'm going to update. I'm going to ask the algorithm to update the picture with taking all the news that's happened now. Has that changed the thought? Because I think it's also, I actually think it's included because the algorithm was talking about how we shall likely decline in October. And then as we start to swing through the earnings, that we begin then to pick up some positive earnings and we start to rally, and we rally up through November, all the way up to December the 10th. Now we have an October Fed meeting and we have a December Fed meeting. I think after today, and with the fact that the president's also laying off people because the government is shut down, and we're having all this rhetoric, but no solutions yet, just a lot of rhetoric, a lot of talk, rhetoric, and pointing of fingers. So our outside of everything, it looks kind of grim right now. Now let's talk about human emotional reactions. All right? That's what creates Elliott. You saw it in force today with this downslide. Now, let me just finish up here. Sorry, because there's just a lot going on. And it intertwines. Everything gets connected. And there's just too many things that kind of come in and they meet. And then the human emotional reaction is normally going to be fear, possibly greed, but the main one is fear. Fear of losing more, fear of a lot of things. And that's what kind of came in today. Now, so Grand Supercycle 1 and 2. Supercycle is the next up. We have 1 and 2 complete. Then we have the cycle, which is the brick red. So we've been in cycle wave 3 since 1949, according to my calculations. There are others that have it a little bit differently, and they don't have this cycle wave 3 uh, as long as I have that's been in effect. But I'm using 1949. And so, which really puts it to 76 years. It really puts it up there. So could we have been or have reached this cycle third wave? Well, I got to go look because honestly, if this thing really starts to come apart, I think this is all the excess since 2009. And what produced this? Lower interest rates, artificially held low interest rates, money being printed, money, because it was readily available. Now, will the brakes get put on? Are we going to move into a recession? Are we going to start having trouble? Because we're not operating, folks. Our government is shut down. All of the stuff that's being said, we are the greatest economy, we're this and we're that. It's like, come on, that may not. And now here comes, yeah, China puts Trump into a corner. So we're going to get the headlines. This is what we're going to get fed over the weekend. So now you can put together we're in a third wave. All right, so cycle wave 3, what's going to be inside? 5 waves of primary degree, 1, 2, 3, and 4. 2009, that low, the great financial collapse, that was a part of primary wave 4. So we're just going to do a cycle wave 4 eventually. But right now, I'm just talking about maybe we're still in that minute wave 4. And we certainly have the room to drop. So this is going to get real interesting. All right, so primary 1, 2, 3, and 4 complete. We're in primary wave 5. Inside primary wave 5, now I can finally bring this down. And it's going to go quick. I have 5 waves of intermediate degree. There's 3 and 4. So we're in intermediate wave 5 of primary wave 5 of cycle wave 3. Inside of intermediate wave 5, going to be 5 waves of minor degree, 1, 2, 3, and 4. So we're in minor wave 5 of intermediate wave 5, a primary wave 5 of cycle wave 3. You see how close we're getting? Because when all the fives match up, it's like going into Vegas, except it's sevens. But we get the fives all the way across, jackpot. We're done. Next move can begin. Okay, so we're in minor wave 5. There are going to be 5 waves of minute degree. Let me take this down. Now we're getting up into this year. Here is minor wave 4. Guess where that happened? April the 7th, 2025. That was the completing move down on the first round of I'm threatening, 125, 145. We're going to put these tariffs on you, and we're going to tariff the whole world. We're going to come through this. They're going to whatever. And so we went down. What happened after that? Which we still could get. Oh, okay. Well, I think maybe I'll pause. I'm not going to, put these on. We're going to put a pause on putting all of these tariffs in effect. And we rallied. And if you remember that, this particular day, that big green bar, the S&P was up 300. 300. So today we were down 227. A little bit bigger, but not really, because we're in a minute degree. Who knows what's going to happen over the weekend? Who knows what announcements or what he will put out on Truth Social or what he'll speak into a microphone. A lot of stuff can happen. And we could talk and turn and just fly up what we just went down. It wouldn't surprise me. Okay, so now let's walk through this. So where are we? Minute one, minute two, minute three. I'm going to bring it all the way down and stick it on my hourly chart because now we're in this, the final move up, because there is minuet four. That's the triangle pattern. I'm going to go one more time out here. So we have minuet one, two, three, and four. We're in, and then minuet wave five done. And that completes the minute third. That was yesterday. Yesterday completed the minute wave three. So did this thing kick off in grand style? Yes. Correction. Gonna be big. Kicks off with a gigantic slide. Yeah, very impressed I was today. It's the correction. We've been talking about it. We've been looking for it. It was unavoidable because the count kept getting stretched and stretched. And as I finally, it's just like, I can't do that. So I start moving it back and say, I got to put that there. And then the market says, yep, all right, here we go. Now, one, two, and three done. We're in minute wave four. Let me bring it back down to the daily. And now we've readjusted, right? Because we went higher. And so now we're basing this on 67, 65 here in the SPX. So we're going to use the same deal. We have fibs. We have 0.236 and 0.382. On a fourth wave, the most common retracement is 0.382. Elliot left for us a guideline that basically states that a fourth wave in motion will find its terminus, its endpoint, within the price territory of the fourth wave of one lesser degree. Well, we just finished a minute degree. Next, none down, one lesser is minuet, and there it is. As we go higher, so in other words, when we're finishing that cycle third wave, and we're talking about where should we go, here. My guess remains that, nope, I take that back. That's the first one. That's primary wave A. We'll finish there. I got to go all the way back out to here. There it is. So it's red. That's for cycle. What's going to be inside that cycle degree, fourth wave? Three waves of primary degree labeled ABC. And each one of those waves is going to break down all the way to the minute degree. I guarantee it. So there's a lot of trading. There's going to be a lot of up and down. There's going to be all over the place. It's going to be a big move. So that primary fourth wave, this is the whole price territory of. If we're going to find it, normally, often it'll head for this low. And now algorithms are really tuning into that. That low was, let me just go to the cash. It was, yeah, I got to round this up, guys. I just have this thing about the number. It's 667. And you can take that 7 and turn it into something else, and you'll know what that number is. Okay, so, and we're still up, trading at 65.52. It's quite the tumble. It's a cycle degree. Now, here's the other side, because we're going to think the world's coming to an end, and it just might feel exactly like that. And who knows? Who knows what will seriously happen with the people that are in charge? You know, a lot of stuff needs to happen. And we've alienated ourselves pretty much from the world. And the world might go, hey, your problem is your problem. So just, I know it doesn't make sense, and I don't wish for that for anybody, but I'm just laying out what could bring the market down to here. It's like bringing a lot of things to its knees, folks. But in honesty, it's just correcting this. It's just correcting 16 years of excess, 16 years of printing money, 16 years of ladling debt on top of debt, on top of debt, on top of debt, on top of debt. And one side wants to blame the other, and the other blames this one. No, it's not our fault, it's his fault. No, it's not his fault, it's her fault, etc. On and on and on. But guess what? It's real and it will be dealt with. And there will be somebody who's going to step up and they'll have to deal with it. And so that's just the way we operate. Now, what can we do in the meantime? There's a lot of things, but there's going to be a lot of trading. I'm just going to share with you, it's like today, once if you can just keep the wits, keep focused, and understand we're going down. What's the Elliott? We're broke. We're coming down in the third. Match it up to your gamma levels that I give. And by the way, that's on membership level, the gamma levels. So I'm just saying what I told you, past tense, what happened. They will change. We will get a new set on Monday. So again, adding that in, you have a roadmap, a basic roadmap that should get you through a day with the futures. And then your own indicators. So there's going to be plenty of trading. That's my underlying talk there. There'll be a lot of trading. And yeah, from day trading to swing trading to options trading to everything. There's still a lot of money rolling around. And it's going to want to move a lot faster now because they have to make adjustments. But the people are going to continue to make money, period. So don't think, oh, we're going down, we're going to go broke. No, some people might, but don't be the deer in the headlights here. There's going to be plenty to trade. But you're going to, there's going to be a lot of chaos moving around you. I think there'll be a lot of fast days. And if you just got to do what you got to do, and you can jump in and you can capture a large amount of money and get out all within about, I don't know, a minute. But it takes a lot to get to do it. There's a lot of fear, there's a lot of stuff. All right, back to this. Let me bring it out of here. But that's the cycle degree coming in there. So what I was showing you before, I got to go to the 5-year. This is primary wave A of cycle wave 4, and that number is 3,500. So what am I looking? Pretty much we're at 65.55. I think we go to 35. You can do the math. That's a lot of points to come out of the S&P. That's a lot of money to come out of stocks, to come out of options, to come out of everything. But guess what? There's puts and there's calls. So the money will be rolling. The money will be rolling. And as a day trader, the money will be rolling. Because each time you trade a put or a call, you got to hedge. S&P will be moving. Money will be rolling. Be there. Be present. Okay, now, weekly, we're here. Left tails, right tails. The right tails are up here. Okay, now I'll add this in because we're in the minute fourth wave coming down. These left tails, one of them or both of them, are going to become a reality. And I think before minute wave 4 is complete, this will become a reality, one of these levels or both of these levels. Now, we actually, right, today, S&P, the SPX, we were above 6,700. We closed at 65.52. That's a lot. That's a big move for one day. So if we do several of those over consecutive days, whatever, we can be down to these levels. Now, from today, from whatever the high was, this high was on the 6th. No, yeah, I guess whatever the day that we made that high of 67.65, that day, or that high is how I readjusted the numbers. So the left tails, what are the left tails? That takes a look at gamma, volatility, and how the combination thereof can produce an event. Now, there's a lot of event volatility, there's a lot of event momentum, and there's a lot of event things. But what do we got coming up? We have earnings. Earnings, check it out, I've been talking about it, start on October the 14th. That's where we start with the banks. Now, I've not known the banks to ever kind of sugarcoat something. A lot of them are real honest and they're bold. In fact, they're standing up to speak truth to whatever there. And what I'm talking about is particularly just giving a little bit more economic how it can affect the economy. What's going on? Is the bank prepared? Listen carefully to what the CEOs are going to have to say, folks. We're going to get a lot of hints about the money. So, and yeah, more on that as we go through it. But to see again, there's a lot to unpack, and I want people to trade. If we sat around and like, oh my God, we're falling apart. What are we going to do? Nothing, because you're just thinking about that. But if we can keep focused, if we just keep our mind, what's your goal? Your goal is to come into the market and trade and make money. Well, now your heyday may be here. We may have days where you're going to have, a 10%, a 20%, 100% win on your trade. I had somebody in my trade room this morning, 1,200 by the time. I mean, it started 15 minutes before I closed the room, or actually even closer to the room closing. In fact, we were joking because every time I closed the room, something big would happen. It happened yesterday, not today. So again, 1,200% return on a trade. Market's given it. Why shouldn't you take it? Okay, so let's get back to the Elliott because we're combining it all to start and to work to trade. That's my other message here that I'm trying to get across. Combining everything you got that makes sense to why this market is moving. So we do have the news. We got to add that today. We do have gamma levels and delta and volatility. All right. So you got mana, you got charm, you got all these different things that you can learn about, not necessarily have to know the ins and outs to trade, not the future and to trade and to trade options. But sometimes with options, it's good to know because they're swinging them and algorithms are doing it and they are way fast. They just do. And they're doing the math. And when the math adds up, I guess a green light goes off and they jump into action. Now, okay, so here we are. What is this? Well, if this is minute wave 4 now, and I have a very minimum down here, right? If we talk about it, that it comes down to the fourth wave of one lesser degree, there it is. There it is. Come on up a little bit more. See that? Fourth wave. So that low, this ain't so bad now, folks. It's 63.63. I'm like, holy crap. What if we get there on Monday? Is it possible? Well, 200 points from here takes us right to that level. Sure, we could do it. We can do it on Sunday. We can extend beyond. Well, thank you, Fib. Here's our next level. Now I want to pull this out a little bit again to show you left tail and right tail. Left tail, 5%. Well, 5% off of that high is 64.27. And our first fib is 63.69, and we've already figured out they could go there on Monday. There's your left tail. It's been realized. Again, the algorithm is correct. Now, and there's a probability scale that goes along with the left tail. The 5% probability scale, I believe, was upwards, I think, of 35. No, that was the NASDAQ. Probably about 32% probability that we'd get there. Well, we're knocking. And here was probably about a 15, 16% probability. I think we get there. What got left open today in our gamma levels after we went through the put wall was that strong support that you hear me speak about almost every day. If you're a subscriber and a membership, the membership, I talk about it every day. This is long-term, been there forever support. And it's large gamma 3 right now. I don't know what it'll be on Monday, or will it have moved? But it's been sitting there. So 6,000 remains very, very important right now. That's way up here. In fact, 6088 for the 10% on the tail is just below there, but above 6,000. So I'm liking that. And so if I'm going to form this fourth wave, well, I'm thinking maybe we can get back to 6120 down to 60, 85, 80, and then we complete minute wave four. Now I want to go back to this hourly chart. Okay. We're halfway through it on the just to the 5%. The 10%, we're still maybe a third, and we still have two-thirds because that's 61 20 down to 60 85. That's the window down below us. So yes. So I think if how am I going to look at this? Well, I got one, two, three, four, or is it a part of, sorry about the door, the wind, but is it a part of the the third wave, this interior third? So is it one, two, three? But then we got this after the New York close, we got a little bit more, and they were able to trade the stocks, not options, but the stocks and the future. So they took it down even more. So this is that. This is not that close. This is the cash close. The future closed at 65.52, and I believe we still have about $43 in premium in the future. So from the close in the future on today, if we took that off, it would suggest that the SPX is trading at 65.10. Still got that 6,000, so 65.10. If we have another 200, we're going to be looking at something around 62. And we've got a bunch of stuff that's come into play, right? We know there's other stuff. So I'm going to say we need to do a minuet wave A, a B, and a C. If you listened and heard me this week, I discussed how wouldn't it be nice to have a zigzag for wave four instead of this triangle or this ABC, WA, blah, 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 all these stretched out moves that take way more time than price. Zigzag, price, time, clean. Boom. So in other words, we got this 1, 2, 3, 4, 5. We're done with the A. Then we have a three-wave B. That could take the time. But in a zigzag, they're pretty structured, I have to be honest. And then we have another 5 down. So our probabilities perk up when we start to plan what could the market do. We know that I think that 5% with the higher probability, that is, I think, going to be realized. All right? Because that one is 64.27. We were down 200, guys. So, down 150, we're there. And maybe that will complete wave A, minuet wave A. And then we get a B wave and then get a C wave. So I'm looking and hoping that it stays above 6,000 because I would like to get that minute wave 5. And it could kick off just like minute wave 1 did. And that's actually how we're going to measure wave 5 because we take the distance of minute wave 1 and put it at the bottom of this fourth wave that's in play, and we will then realize where wave 5 is going to get. It's going to be a nice rally, but will it get back above 7,000? Will it get back up to 7,400? Don't forget we have those same, I got to pull it out. We have the right, we have the right tails, right? Where we have again the 5% probability. And here it's just as strong. In fact, it's a little bit higher in to the upside, where the 5% has I think close to a 30% probability of playing out. And the 10% has again maybe like a 15 or 14% probability. But look at those numbers. 7108. And I'm talking about, well, what if we get down towards 6120 to 66,088 or even closer to 6,000, and then still do that? It's going to stay there. I will keep running the algorithm. We'll have updates. So yes, we could get down and then do that other one, and it could be just as quick. Don't forget, algorithms talking about as well that we have a fair probability or fair probable chance of surging after this correction. That we kind of drift and go lower. We certainly drifted pretty hard today, but we go lower and then the market turns and begins to build. And that should take us through December the 10th. And then we decline again into the end of the year. Now, that's what the algorithm is telling me. Hasn't changed. I'm going to continue to say it. All right, so dipping down inside of this thing, I'm going to go to the 15-minute chart, and now we can look inside. So we have 1, 2, then we have 1, 2, 3, 4. I'm going to call it 3 there, 4, and then 1, 2, 3. Maybe that's a 3 and 4. We may have done 1, 2, and 3. In fact, I should be marking those. I forgot. So we're going to have 1 here.
Connection lost.
We're going to have 1 here. I'm sorry about that. It's telling me my connection because my trading screen is still open. I'm going to duplicate that, put it down here, and edit it, and put a 1 there. There. Now it's going to be clean. And then I'll put a 2 up here. I know this takes time, but I got a lot to talk about. I'm sorry. Okay, put the 2 because I want it to be accurate. All right, so then we got the 3 and it may be done. Then we get a 4 and we still have a 5. Not impossible. And also because of the depth and because of the strength behind that selling, yes, we're going to bounce. We had the bounces here. You see them. In midst of like, that's bad news. We bounced. Don't consider that everybody's turning bullish. Think about what's trading. There could be somebody walking in and buying 1.5 tons of puts. And what's the hedge? You buy the underlying. Or they sell 1.5 tons of calls. What's the hedge? You buy the underlying. Because you're selling the stock. And then you got to buy it. So, and that can produce these moves along with these moves. All right, so that's taking a look here. You can take a look also on the 15-minute. Everybody, do you see how quickly that went? This is a 15-minute chart. 250, 28. Let's take it up. Let's go to the hourly. 208 and 20. This is impressive. This is the 1 hour chart. The 20 and the 8 broke below the 200. And the 50 is not far behind. On the daily, that's the one that always will be surprising. The 8 sharply lower, turning sharply lower, but still hasn't broken the 20. And that was quite the move. I am expecting these all to head for here. Maybe in the A wave down, they meet here. Or maybe they just go below, but I don't think for very long. If that first set of fibs is going to be correct to finish minute wave 4. Okay, that's kind of the goal. All right, let me take this back out. I can leave it on the daily. Let's go over and take a look at the futures market. Here we got that additional. So same deal, wave 3. I talk about this in the update, so I'm just going to go straight down to this chart. And here we look at, this was me earlier. Like, oh, where am I going to find support? Nowhere. Gone. Look at that. So this wave 3, as wave 1 to 2, right? So we're comparing it to wave 1, exceeded everything that normally I would put together for fibs. Well, not everything, because you can always go back and you do 5.618, 6.618, and all that. And I'm sure that's what will come up. But I'm going to remove that for right now because it's 1, 2, and we're obviously looking at the third. And so to do your fibs on the way back up, and here is what I really want to include. If you trade the future and say that is what's it, and we get an upswing coming on Sunday to Monday, and you just run your fibs like this, and you think, oh, normal is 382, which is 66.41. First thing, yes, that is the most normal. But consider what's going on, and we don't know if this is where it's going to start. But point that I want to make is that in a serious drop or a strong rally, pullbacks are minimal. So we'd be lucky if we're going to get 0.236. Same deal. Our larger picture hasn't changed yet. We're still in this rally phase up. Don't have any type of confirmation just because of what happened today that the sky's going to fall. So still looking for just the minute wave 4 to come in, and we have a minute fifth wave up. I'm keeping it technical. The rest of it we can talk about, and I am, but I'm going to try to keep it in the technical sphere. And that here, pullbacks. So if we're going down, the pullback is a bounce. If we're going up, the pullback is a pullback. So they're coming in shallow. Other thing, volume picked up more towards this afternoon, because it wasn't all that great to begin the day. But we ended up well. We ended well. Then that part will be gone. I think the NASDAQ did close to 800,000 regular session. Okay, so that all remains the same. We're looking for a wave through. We're going to get a 4. We come down in a 5, and that's going to be minuet wave A that I'm going to be looking for a little bit. So I'm saying maybe Monday, Tuesday even, we kind of futz around, we go down, we play around until we finish this A wave, and then we get a little relief and we start to rally up. And for whatever the reason, something will come out and people will be like, okay, but trust me, it's going to be the way the options are trading. That's where it's going to be. And so, but same thing though, when you're trading, you're going to have to be very aware because things can swing and they can swing quickly. All right, so that is that. And let me just take that off for right now. And I think I already talked about, yeah, here's the hourly in the future. Excuse me, in the futures market. And you can see the 50's crossing the 200, and that's on the hourly. It's kind of great, but here, yeah, we're a little bit oversold. All right, so I think I have said enough. I don't know what else to add other than we're still in this, and we're going to get the A, the B, we'll come down in the C. I've given the levels coming off. Those are the fibs, and then we also have the tails, and we have the probability. So we know, like, okay, there's a 5% probability that we can get down to at least 64.27. And then 64.12 is 236. They match. Then we have 60.88. Well, this is 61.65. Not as close, but we're close. Right? So we got those all together. This has a less probability. This has the biggest probability that it will be reached. Not that that's where it's going to finish, but that's where it would be reached. In this case, we may get down there and it's wave A. Okay? And then we get a B, and we come back down and we get here for wave C. So we're going to have two occurrences of slam, and then we bounce, and then slam. That's the pattern as well. All right, that's going to be it. This is long. Thank you for listening today. Please comment. Please ask questions leave a comment. If you don't like something, tell me about it. Don't just leave me a dislike. Tell me. And because this is a work in progress as well. Things that I also do. I do have a trade room. I'm giving high consideration of adding it as a live stream here on YouTube. So be a pal. If you have an interest in that, leave me a comment. A live stream. And of course, because it's going to be a little bit more than just everybody gathering around a campfire. It's going to be some education. It's going to be trading. So there's likely will be a cost, but I'm thinking of rearranging the membership levels. So, enough said. Stay in touch. But right now, I do have a trade room. And if you go to logicalsignals.com and you hit the trade room button, it's still available for $100 for your first month. And I'm going to leave that open. I'm not taking a ton of people because I like to keep the trade room to where people can talk, people can share, people can openly just talk their analysis. And so Right now, I'm up to 5, 6 people. I'm thinking 10 to 15. So if you have an interest and you want to go, to take a look for a month, please join. Also, the same deal. If you have an interest and you think you're going to hang around for 6 months, I'm offering that for $750. Normal would be $900 for a 6-month subscription. And that's it. And you can get that on the website. All right, folks. The next Elliott Wave update will be on Monday morning. And again, that's for members only.